Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is chart of the market. This is the mini S&P 500 futures contract, front month in nature. Looking at the last print of 1171.50 on this very impressive down day on this Tuesday, the 4th day of May, 2010. Looking at an inverted head and shoulders formation here, a nice impressive bottoming formation. As a matter of fact, we're going to get right to, for informational purposes, our free trade today is going to be a buy right here at 1171. If you get this video with production, it'll probably be about 30 more minutes or so, and the market's still at 71. Definitely looks like we're going to have a recovery here. That's purely from price technical bottoming formation given the inverted HNS and the extreme move to the downside. Having said that, the market is clearly bearish. As you can see, we have a bevy of bearish indications. These are proprietary indicators, how we view the market and where it's likely to go. As you can see on the Monday, yesterday, we did have some bullishness here, bullishness here, bullishness here, and what do we have? We have a close near the upper section of the day's range, and closely matching the highs of late last week, around 12:05 in the ES, but certainly didn't get there. What does that portend? A particularly weak market. So then when we get this gap open lower today, on Tuesday, a turnaround Tuesday, another TAT, and we get to move lower. But nevertheless, we do have an inverted HNS there, so we'll get right to it. Nice little buy set up there around 70. Certainly your stop will be this shoulder right here around, we'll call it, let's see. Every time I do that, it messes up. There we go. So we're calling a low at 1168.25. So 1171, stop at 1168 or so. Definitely going to target probably around 78 on this move. So 7 points in profit target. Hopefully get the video right around 71. But that's where the intraday dynamics are suggesting. Having said, actually, I take that back. It's definitely bearish. The intraday dynamics are suggesting a bearish resolution to the day's end. We have bearish price technicals. We have bearish trend. We have bearish, and actually there you heard some more sells in our portfolios, and we're going to go ahead and switch over to let's see, these are a couple of new strategies we're working on. See some nice sells right there. This is actually a day trade model that we're working on currently. Doesn't look too bad. We're going to go ahead and pull up 14,000 and 15,000 in profit, 3,200, of course, after slippage and commission. And actually, it'll look more like this. So we'll just take the shorts out. It's not particularly good short system. $15,000 in profit, $2,400 max drawdown will be this new system, MRS ESF. Not bad. But so we're going to go ahead and scroll through and look at a few of these. Actually, we're going to look at the daily chart and take that back. And not anything really going on in our sentiment system. Quick stop out there, but on a daily basis, as you can see, the market is definitely coming down to test our key measure of trend following support resistance right around 1170 to 1175. Definitely why you're seeing a bit of a bottoming formation in the intraday. For our intents and purposes, that's the be all end all. Generally speaking, you have this measure around 1100, as you can see right there. Anytime the market comes down there and tests, that is, in fact, the de facto be-all, end-all. But nevertheless, kind of a declining head and shoulders formation that could reverse and be a bottom right here and a great buying opportunity. And we would suggest so. We're not abating our bullish bias. We are sitting on open position profits of around 54 points or so, 55 points, bullish at 1121 on the S&P 500 index. And right back to where we had this take some long profits off the table measure right around there. Did have a blow off top. Could be lower. Should we get below 1160? Definitely should expect a move down to 1100 as we move into the summer and certainly the fall sell-off season of the market. So definitely are holding bullish now, but below 1160 we'll start to get a little concerned. May switch back to bearish if not neutral. And but definitely an interesting formation with the declining head and shoulders formation there, right there. So that's the S&P 500 market on a daily basis. Our day traders have just been lighting it up. For instance, just pulling one out, here's the day trader 21.0. Look at those beautiful trades on the YM 30-minute chart, buying, selling, buying, and another short position here today. Beautiful trading model. Not sure what our other models are doing. 23 is short, 24. Look at the beautiful trades in 24. And a lot of our newer swing systems are actually short. On our SSR, that one's actually long, 14.0. So these are finally starting to make some money after just putting them in the rotation. This is actually short as well. There we go. Can't really see it. Short signal right there, around 11,100. So a nice $1,300. 13. Oh, I take that back. Oh, it's only a few hundred. I was going to say, so nevertheless, we've actually tweaked our Swing ESR. This has been a long-standing portfolio, and as you can see, it is just acting beautifully. There you have. Just really can't get away from those high drawdowns on a lot of the swings. $28,000 in profit, $100 average trade. But as you can see, just really nailing every part of this market and actually booking to the long side actually. Right there at 1169.50 today. So nevertheless, we're going to move right along. That's a couple of our swing systems. Actually did want to touch on, there's our ES Day Trader 1.0 and a nice short setup. But I want to move to, let's just close all these until by process of elimination. There's our Day Trader 5.0. That's really helping out. Our Day Trader 5.0 and our Day Trader 8.0, completely non-correlated. Both are trading similarly, though. Day Trader 8.0, that one's short 6.0, and the 9.0 really helping out our MapDT version 4.0 HR. And that's actually leading the pack, as you can see. We're actually at $1,500 in gains for that. That's in real time. 2360 was about 30 minutes ago when we produced this little promotion. MapDT version 4.0 HR gains another $2,400 today. That's Tuesday, midday. And the process leads the pack with a 6-day gain of $12,000, almost 50%. You can actually subscribe today and save an extra 20% by entering promo code VIDEO. We'll go ahead and look at that in a second. But as you can see, this was actually the promotion from yesterday. It gained $3,785. And that's on the heels of a $4,500 gain last Tuesday. So here you see, last Tuesday, $4,500, took the day off on Wednesday, $1,000 on Thursday, last Thursday, $420 last Friday, $4,000 yesterday, and actually up another $2,360 today for a 50% return in just the last 6 days. So if you're interested in full automation trading of this portfolio, actually, we're going to look at, so here's the real times, or the longer term stats. We had that anomalous December, worst drawdown we'd ever had, but as you can see, the portfolios are quickly back, particularly this one. The very next month made $20,000. This is factoring in $26 for every downturn for slippage and commissions. Actually, look at that. Adding we've added the 21.0 into the MapDT version 4.0 HR. So I don't even think those returns are included in the 21.0, but you can actually see, we just highlighted that the 21.0 is doing very well as well. But over time, as you can see, 118% maximum drawdown for this very popular portfolio, 2,300% return in 42 months as of March, or through March, January, February, and March of 2010. And as you can see, the portfolio continues to outperform on a relative basis with a 50% return in just the last 6 days. So if you're interested in trading that portfolio, just go to the website. There's the home page. There it is right there under top sellers. You can click on there and go ahead and add it to your cart and enter promo code VIDEO right in there, and you should be able to save, that's 2 units, so we'll recalculate that, an extra 20%. That's an extra $500 on a quarterly subscription. If you have any questions, go to the website, chat with the support team live. Any questions at all, or shoot us an email to admin@MiniAnalyst.com. And hope you enjoyed the informational trade, the S&P analysis, the intraday analysis, and the quick update on how our actual portfolios are doing. And we'll see you at the next update.